Hey everybody, hope you're doing well. Today we have an important video to discuss. We are going over the top 5 AI stocks that could double in 2026. On all of these, we're going to see massive growth, very massive. Now, this is going to be important so you can get ahead on your stock market journey, all while most people are sleeping on these plays. Here on the channel, we cover stocks, stock news, economic concepts, stuff that's happening with the economy, and what you should be aware of so that you can make the best decision you can when it comes to the stock market. We have an absolutely volatile market today, folks. We are going to provide the best information we can on this channel. I hope you like this content we're making, and all I ask in return is that you hit that beautiful like button, hit that ravishing notification bell as well. All right, let's get into it. So, Wall Street analysts are literally putting out price targets calling for double, triple, even quadruple digit returns on some of these names. 2026 is shaping up to be the year where AI infrastructure build actually hits critical mass. We're talking $1 trillion semiconductor market, AI agents going mainstream, companies sitting on massive revenue backlogs that are locked in already. But here's the reality check. The window to get positioning is closing fast. If you're sitting on the sidelines right now, you're going to be kicking yourself in 12 months. Watching early movers absolutely print money. So today, we're breaking down 5 AI stocks that have legitimate potential to double your money in 2026. And I'm not talking about speculative garbage. These are real companies with real revenue, real catalysts, and price targets that will make your chops water. I'm going to break down what they are, what they actually do, recent and upcoming catalysts, the bulls, the bears, the bottom line, and how it could double in the next year. I'm going to make the case for it and you be the judge. Okay, let's get right into it. So stock number 5, we have Soundhound AI, ticker SOUN. This is the underdog play that Wall Street is finally starting to wake up to. Now, if you haven't heard of Soundhound, don't worry, most people haven't, but that's exactly why this could be the sleeper opportunity of 2026. This is essentially the voice AI company that's trying to make every interaction you have, whether it's ordering food at a drive-thru, calling customer service, or talking to your car, completely conversational and powered by AI. So what do they actually do? Well, Soundhound builds voice AI platforms. Their main product, Polaris, handles voice ordering across multiple channels with insane speed. We're talking 350 millisecond latency. That means when you say, I want a cheeseburger with no onions, the AI understands you instantly and processes that order in real time. They're already working with big names like Chipotle, Five Guys, Jersey Mike's, basically turning drive-thrus and phone orders into AI-powered experiences. Now, here's why this matters right now. The catalyst that everyone's missing, agentic AI. Soundhound just acquired a company called Interactions, which is a pioneer in AI workflow orchestration. This isn't just about understanding what you say anymore. This is about AI that can actually do things. Book your reservations, update your travel plans, take meeting notes, handle full transactions without human involvement. And get this, the agentic AI market is projected to grow from $2.6 billion to $24.5 billion by 2030. That is 46% growth every single year, folks. Soundhound is positioning themselves right at the center of this explosion. Now, let's talk the numbers. Third quarter revenue came in at $42 million, up 68% year over year. Management's guiding for full year revenue between $165 million and $180 million. But here's the kicker that nobody's talking about. They're targeting adjusted EBITDA break-even by the end of 2026. When unprofitable tech companies hit profitability, that's usually when the stock absolutely explodes. And this could definitely happen in 2026. Recent catalyst, folks, I'm just going to rapid fire through what's happened recently. They've signed a deal with an unnamed Chinese company to put their AI on millions of devices in India. They've got contracts now with 7 of the top 10 global financial institutions. They've partnered with major restaurant chains. At CES 2026, they showcased their vision AI capabilities, which turned a lot of heads in the industry. In terms of the bull case, folks, revenue is accelerating, burn rate is coming down, and they're entering the agentic AI wave at the perfect time. They've got $269 million in cash and 0 debt, which gives them plenty of runway to scale up without having to dilute shareholders. Now, the bear case, I've got to be honest with you folks, they're still burning through cash like crazy. Third quarter net loss was $109 million. The valuation is stretched at 32 times sales, which some people look at as a bear case. This is expensive for even a growth stock. If they miss their profitability targets, this thing could get cut in half overnight. I personally do not think this is going to happen, but we have to mention the bear case. Bottom line, folks, this is the highest risk, highest reward play on today's list. If you can handle the volatility, if you believe that agentic AI is about to go mainstream, Soundhound could be an absolute monster winner. The only thing is, size this one appropriately for your risk tolerance. Okay, stock number 4 is Broadcom. The ticker is AVGO. The current price is around $352. We got an average price target here of $460, and the bull case target is $510 plus. That is from Truist Securities. Potential upside is 35 to 50%. And if we're using those numbers, folks, that is a 45% increase. All right, so Broadcom, let's get into it. So this is the AI infrastructure beast that is flying completely under the radar. Now, Broadcom is one of those companies that doesn't get a lot of retail attention because honestly, most people don't even know what they do. But here's what you need to understand, folks. While everyone's obsessed with Nvidia and their GPUs, Broadcom is quietly building the custom chips for literally every major tech company on the planet. So here's what they actually do. Think of Broadcom as the arms dealer for the AI revolution. They design custom AI semiconductors, application-specific integrated circuits or ASICs for the biggest names in tech. We're talking Google, Meta, Amazon, OpenAI, Anthropic. All of these companies need custom silicon to differentiate their AI products, and Broadcom is the one building it for them. So why does this matter? Well, because these hyperscalers don't want to be completely dependent on Nvidia, they want their own proprietary chips that give them a competitive edge. And Broadcom has a 70 to 75% market share in custom AI chip design. That is a massive moat. Now, here's the massive catalyst that you need to know, folks. Wall Street is absolutely salivating over the fact that Broadcom is sitting on a $73 billion AI backlog. Let me put that into perspective, folks. That's nearly equal to their entire 2025 revenue. This isn't speculation or projected deals. This is contracted revenue already on the books that's going to flow over through the next few years. In terms of the numbers, folks, we got fiscal 2025 revenue came in at $63.89 billion, up 24% year over year. Their AI semiconductor revenue alone surged 74% year over year. Operating income jumped 62%. But here's the real story, folks. Management is expecting AI revenue to double year over year in 2026. Think about that, folks. Double. We also have some recent catalysts that have been absolute game changers in terms of Broadcom. They announced a partnership with OpenAI to build custom AI accelerators. They're expanding their relationship with Anthropic, the company behind Cloud AI. Wells Fargo just upgraded them from equal weight to overweight. Goldman Sachs literally just called them a critical arms dealer in the AI boom, and Bank of America, folks, included them in their top 6 stocks for the trillion-dollar chip surge that we are about to see. The bull case here, well, custom silicon is the future. The hyperscalers are spending hundreds of billions of dollars on AI infrastructure, and Broadcom gets a cut of all of it. Their ability to co-design chips with customers creates an incredibly sticky relationship. Once you're locked in with Broadcom, you're not switching to a competitor. Now, the bear case, folks, the stock did pull back about 16% recently on concerns about China restrictions and potential margin compression. At 71 times their earnings, it's expensive even by AI standards. Some analysts are worried about integration costs from their VMware acquisition dragging down short-term results. Bottom line though here, folks, is that this is your quality sleep well at night AI play. It is less volatile than others on this list. It is backed by real revenue and real profits, and it's positioned perfectly in the AI infrastructure build out. If you want AI exposure without the stomach-churning price swings, Broadcom is your answer. Okay, stock number 3 is Nebius. The ticker is NBIS. Nebius is the under-the-radar AI infrastructure play that literally nobody is talking about yet, but Wall Street insiders are going absolutely crazy over it. Now, I don't know how many people watching this video have even heard of Nebius, and maybe you have, but that's exactly why this could be the opportunity of 2026. This stock is up over 200% in the last year. Analysts are still calling it to double again from current levels. So what does Nebius actually do? Well, Nebius is a full-stack AI infrastructure provider. Think of them as the picks and shovels play for the AI gold rush. They build and operate massive data centers packed with top-tier Nvidia GPUs, then rent that computing power out to AI companies and hyperscalers who need it to train and run their models. Here's the genius business model. They're not competing with their customers like Microsoft is with OpenAI. They're just providing the infrastructure. Companies like Meta, Microsoft, and other AI leaders are signaling massive multi-billion-dollar contracts with Nebius to secure GPU capacity because demand is so insanely high that supply can't keep up. Nebius is an absolutely monster play. The massive 2026 catalyst that we are looking forward to, folks, as well as many on Wall Street, is that Nebius just announced that they are one of the first cloud providers in the world to deploy Nvidia's brand new Rubin platform, which is the next generation beyond Blackwell. They are deploying these across the US and European data centers, giving them a massive competitive advantage, folks. And get this, Dan Ives, who has been crushing his AI calls, just named Nebius his top AI infrastructure pick for 2026. He is saying the company is ripe for acquisition by a hyperscaler like Microsoft, Google, or Amazon. When Dan Ives starts talking about buyout potential, well, people start paying attention. Third quarter revenue for Nebius, folks, hit $146 million, up 355% year over year. Let that sink in. That is 355% growth. Their core infrastructure business grew 400% year over year and 40% just quarter over quarter. So this company has lots of room to grow. Here's where it gets wild though. So management is projecting annualized revenue run rate between $7 billion and $9 billion by the end of 2026 to potentially $8 billion annual run rate. Folks, if they have that target, we're looking at exponential growth. Now, in terms of recent game-changing news, they just increased their contracted power capacity target for 2026 from 1 gigawatt to 2.5 gigawatts. Why does that matter? Because in the AI infrastructure game, your revenue is limited by how much power you can bring online. Demand is basically infinite right now. They're sold out of all available capacity. They've got a $3 billion infrastructure agreement with Meta already signed. They announced partnerships with Nvidia, and here's the kicker, folks. They've got over $20 billion in revenue backlog. That is contracted future revenue sitting on the books right now. Here's why analysts are absolutely pounding the table. Out of the analysts covering this stock, all of them rated either a strong buy or buy. We've got 56% potential upside. The bull case here, folks, is that the supply of AI computing is severely constrained, and Nebius is one of the few companies with the capital, with the relationships and the execution capability to scale fast enough to meet the demand. They're vertically integrated, they own the data centers, they deploy the GPUs, they provide the software stack. That gives them way better margins than competitors. Now, we have to go over the bear case as well. This company is currently burning cash. They are in full growth at all cost mode, which means they are taking debt to finance expansion. The stock trades at 60 times sales, which is expensive. Now, many companies of this size and of this situation do take on debt to finance expansion, so that's not necessarily abnormal, but it is something you got to be aware of, especially if you play this stock. If AI demand slows down, or if they can't execute on bringing all that contracted capacity online, the stock could go down. We're talking 30 to 50% drawdowns. This valuation leaves very little room for error. I am still bullish on it, but we have to mention the bear case. Bottom line, folks, this is a high risk, high conviction play. If a hyperscaler buys these guys out, shareholders could see massive premiums. Now, none of this is financial advice. Don't do the frisky unless you are willing to take the risky. That being said, I would not put 50% of your portfolio into this one. This is a 5 to 10% position play where you're comfortable with volatility, but the upside is so massive that it's worth the risk. If they hit their targets, we're looking at a potential triple-digit return by the end of 2026. Okay, folks, so stock number 2 is Palantir. We got to talk about Palantir. I know this is controversial, but a top AI stock list, especially right now at this moment with tons of AI and military demand and potential catalysts for Palantir, we can't leave this one out. We got to get into it. So PLTR, and just so you know, folks, Wall Street hates this stock. In fact, they love to hate this stock. Palantir is probably one of the most divisive stocks out there. It's controversial to talk about, but we got to get into it. Some people think it's the future of enterprise AI, yet a lot of people do think it's an overpriced piece of garbage. And I'm going to give you both sides and let you be the judge. So first, what do they actually do? Well, Palantir builds AI software platforms that help massive organizations. We're talking governments, we're talking Fortune 500 companies, defense contractors, and it helps all of them make sense of absolutely enormous amounts of data. They've got 2 main platforms. They've Gotham for government and defense and Foundry for commercial enterprises. But here's what's really getting attention right now, and that is their AIP platform, which stands for Artificial Intelligence Platform. This is their AI enterprise solution. This is what's generating real measurable ROI for companies right now. And I'm going to give you a quick example. So Wendy's was dealing with a supply chain issue that normally took 15 people an entire day to resolve. With Palantir's AIP, they fixed it in 5 minutes. That's the kind of transformation they're selling. So here's why this matters right now, folks. There's a huge catalyst coming up. Citi just upgraded them to a buy, calling for 80% sales upside potential in 2026. 80%, guys, that's definitely a lot. Their analyst Tyler Rodke is saying that AI budgets and real-world use cases are accelerating way faster than people realize in the AI space. Now, in terms of US government partnerships, the Trump administration just tapped them to compile data across all federal agencies. And lately, one congressman on the Foreign Affairs Committee very controversially just bought up $50,000 worth of shares. To many people, that is a huge tell. Now, the bull case here, folks, they basically have no real competition in what they do. Customer count is up 45% year over year. Customers tend to expand their deployments after the initial contract. Once you're locked into Palantir, you basically spend more there over time. They're growing way faster than the overall 24% AI software market growth rate. And if they can capture even a decent chunk of the $400 billion AI software opportunity by 2030, this stock could absolutely double. The bottom line, folks, is that this is the expensive but maybe worth it play. If they execute and keep growing at this pace, the stock could keep defying gravity and make the skeptics look absolutely foolish. But if they miss even one quarter, this could crater 30% overnight. It's not for the faint of heart, folks, and you need to understand that going in. And lastly, folks, we have stock number one, Nvidia. Now, no top AI stock list is complete without Nvidia. This is the king. This is the GOAT. This is the absolute foundation of the entire AI revolution. Nvidia, ticker NVDA. And now, if you're surprised that Nvidia is number one on this list, well, I will just remind you that although everyone knows about Nvidia, most people are still underestimating just how dominant this monster company is about to be in 2026. So here's what they actually do in case you don't know. Nvidia makes the GPUs, that is graphics processing units, that basically power everything in AI. Their AI chips run everything from large language models to AI inference to autonomous vehicles processing sensor data in real time. If it involves serious AI compute, Nvidia is definitely involved. They've got about 80 to 90% market share in AI chips, and that dominance isn't going away anytime soon. So why 2026 is absolutely the year for Nvidia? Well, Bank of America just came out and said we're only at the midpoint of a decade-long transformation in AI. They are projecting a 30% year-over-year surge in global semiconductor sales that is going to push the entire industry past a $1 trillion annual milestone in 2026. So Nvidia is the undisputed leader in the highest margin, fastest growing part of that market. Now, in terms of their massive catalysts, we have the demand for their Blackwell GPUs is absolutely off the charts, folks. They're sold out through 2026. Free cash flow is projected to hit $500 billion over the next 3 years. Every single hyperscaler is buying. That's Microsoft, Amazon, Google, Meta, and many others. They're spending tens of billions of dollars on Nvidia hardware. Enterprise AI rollout is accelerating in 2026. We've talked about this on the channel as well. Companies are moving from testing to production. Now, the recent concerns, and this is the bear case, the stock did pull back after new China export restrictions got announced. OpenAI is buying $10 billion worth of Cerebras chips. That spooked some investors about potential competition. Some people think the valuation is stretched, and some people are looking at a potential Chinese competition and staying away because of that. Now, here's the reality. Nvidia's average GPU sells for around $30,000 compared to $2.40 for standard chips. That is incredible pricing power, folks. They're also a lot better, obviously. So their free cash flow generation is unmatched in the entire industry. And the critical thing is that every Nvidia competitor has failed so far. AMD is gaining a little bit of market share. We have to acknowledge that. But Nvidia's GPUs are completely sold out through 2026. The demand is insane. Bottom line, folks, Nvidia is the foundational play in AI, period. If you believe in the power of AI, if you believe that AI is real, that it is growing, that it is going to transform how businesses operate, you absolutely must own Nvidia. And I don't say that lightly. That is a non-negotiable, folks. In terms of AI plays, Nvidia is absolutely the king. So if you want AI exposure, I would highly recommend Nvidia. Now, yes, the way the stock trades, it could pull back 10 to 15% on any given piece of news or market volatility. That's just the reality, folks. It is what it is. But over the next 12 to 24 months, this is a winner. It could absolutely more than double or even triple in stock price. The combination of market dominance, execution, cash flow generation, and the sheer scale of AI infrastructure makes this the safest high conviction AI plays, in my opinion, that you can possibly make today. All right, folks, that wraps it up in the video today. So just a quick recap. We went over Soundhound, the high risk, high reward agentic AI play. We went over Broadcom, the quality infrastructure play, the I want exposure but I also want to sleep at night stock, Nebius, the under the radar play, Palantir, the explosive, controversial, but growing like crazy, and Nvidia, the AI monster, about to take more control and share of the market. That's all for now, folks. I hope you enjoyed this video, and if you did, make sure to hit that beautiful like button. Don't forget to subscribe to the channel as well. We always appreciate newcomers. Stay safe out there, traders, and I will see you in the next video.